Hey friend, I want to show you this, and you will listen and you will pay attention. Okay? There is a tweet here by Mr. Dinshu, and he says, this is the point where CZ from Binance sold his house and bought Bitcoin at $800 and survived the bottom of $200 for almost 2 years. The Bitcoin daily trading volume at that time was $19 million today. You know, it's 1,000x bigger. It's a simple rule. More the time Bitcoin is at low price, faster it goes than your expectation. Now, when you read this, most people will have the view that you are going to be rewarded for hodling. And that is true. But now it's time to take the medicine. I have a chart here of Bitcoin, and this is little CZ. This is where he bought the $800 Bitcoin. All right. Yeah, it was painful. Yeah, it was painful. All right, let's do it. This was Mt. Gox collapse. It was painful. Okay, went down for a year, then it went sideways. Maybe we're here now, and then it went up. Okay, from where he got in. All right, from where he got in. Do you want to know how much he was rewarded? Let's go $800. He was rewarded by 24x in the next cycle. 24x. All right. So I want you to have a think about what was going on during this time. CZ, let's write it down. CZ got 24x from his entry for his Bitcoin belief. However, I'm now going to add CZ deserved the reward because, one, everyone legit thought crypto was a scam. 2, Bitcoin was a Ponzi label. 3, Satoshi was a weirdo abandoner. 4, it was a terrorist plus child abuser coin. 5, it was an illegal substance dealer affiliation coin. And finally, 6, you are mentally disabled for putting your savings into this. This was the actual inner workings of the human brain going on during this time. I want you to take a look at these. And I'm not exaggerating any of these. That was what was going on. If you were to label this was just risk. Okay, that's all it is. Risk. Risk is going to have a red background because we're friends here. That's it. That's his risk. And his reward equals 24x. All right. He got 24x in the next cycle. Okay. His risk was all this. Look at this. Look at this. Look at all of this. This is how thick it was, man. Look how heavy it was. This guy sold his house, put all his life savings into Bitcoin. He got 24x in that next cycle. In fact, it's actually still 24x today. Very sad. And that brings me to the next point. If you buy Bitcoin today, you are not taking on this risk. I'm not taking on this risk. All right? You're learning now. You are my friend. We are kind. And we're learning together. You're learning off me. Look at this risk. Look at this thick risk. This does not apply today. Anywhere near close. Anywhere near close. Do you want to know what your risk is today? Let's go through. Your risk is nowhere near. What would you say that the risk of Bitcoin is? Risk equals 1. The Fed might never cut rates again. Seriously, right? Which is funny because we have 100 years of a pattern of behavior of them stimulating and printing. We've got thousands of years of them doing fiat printing. But this is a risk. If you talk to people, oh, the Fed will never raise rates again, cut rates again. That's one risk. Number 2, we might never get a Bitcoin spot ETF. I'm putting a question mark here because no one actually thinks we're not going to get a Bitcoin spot ETF. So you know what? I'm going to change this because it says this Bitcoin spot ETF might take 4 years instead of 2. That's another risk. Do you understand? I hope you're starting to see the differences with the risk here. This is nowhere near this pink one, right? What's another risk we'll think about? 3. You know, someone might say, oh, Ethereum takes over Bitcoin, but you still have an opportunity to succeed. No one had that risk. No one had the competition risk in 2013 when CZ got in, you know? So think about this, you know, what's also a risk of Bitcoin not succeeding? You think about, like, the government bans it? You can't even say that, because that risk was around with CZs as well. Look at this risk. Look at this, friends. CZ had 6 juicy, thick risks. I use the J word, juicy. Why? Because risk means opportunity. Risk means someone out there has given up. Someone out there doesn't want to look anymore. Someone out there clicked market sell and doesn't care how low the RSI is, doesn't care about the fundamentals, doesn't care about the growth rates, does not care. They drink soy. They have tiny sultana balls. Their ovaries are tiny. That's the type of people you were dealing with back then. And that's why it's underpriced. We don't have that now. We just have people who are selling because price went down, right? Now, that happened before, but this is a different risk metric you're taking on. If you buy off them. So don't worry about the sellers. This is your buying risk. And with this, I'm sorry, you don't deserve a 24x reward. Okay? And unfortunately, this hurts. This really hurts, man. This is killing me. This is killing me. But if you're if CZ bought at $800, 30% lower, all right, so you're oh man, this sucks. You're a $45,000 Bitcoin buyer, like here, yeah. You're a $45,000 Bitcoin buyer. Look at this little risk, okay? You don't deserve 24x because you're not taking that much risk. How much do you deserve? I don't know, man. Let's do the number. Maybe it gets to 200k. You get a 4x. We'd all be cheering for that, right? So let's write it down. Let's write 4x. And I'm sorry, we're not going to do dark green. It's going to be this light, pale poison green. And it hurts, man. It hurts to see this, but you have to understand this. So to make it in this game, you must take risk. You must. There is no shortcut. And risk, it's easy for you to say, oh, I love risk. Give me the risk. Give me. It's easy to say that. I get abused every single day. I get a lot of messages. I do not let it wear me down. I get people calling me mentally disabled. I get people just saying, they use my sentences on me. They go, you just cope. You're seeing the way things you want them to be. Yeah, they're never going to go up again. I get told this every single day. I get called stupid. Everything. Because I didn't click sell at the very, very top, which I don't care. All right, I don't care. But I get called this every day. But don't worry about me. Can you take the pain? Can you take the pain? CZ had to take the pain here. He deserved 24x. You're taking a different pain here, man. You're not taking like red tier pain. You're taking yellow tier. You know? See, it's not even about if a Bitcoin spot ETF is coming. It's like, when. And it's not if the Fed cut rates. It's like when. Is it going to be next year or the year after? So you got to understand. More risk, more reward. That's it. Obviously, don't get stupid with it. You know what I mean. If there's a lot of risk, that's what it actually means here. If you go off your intuition, this should all make sense to you. But sometimes you need someone like me to get my guardian wings out and actually show you this is actually what's going on, man. This is what's going on. That's what risk means. The nerds who go to universities and go, oh, the volatility and the standard deviation, this and that. Yeah, I did all that shit at uni too. That's wrong. Okay? How they measure risk, right? The quant guys is they measure risk by, so if I have a coin that goes like this, not that risky. But if I have a coin that goes like this, oh, very risky because the volatility's up. Heaps, right? when they measure volatility just based off how much the number moves up and down, that is not accurate. That's not accurate at all. But it's the best measure we have for short-term risk. So that's how they're measuring risk. But that is so hard to quantify in Bitcoin. So hard. And if you try to use these models, you lose to the guy who just looks at this red tier risk and goes, you know what? Fuck it. I'm going to throw some in. You lose to that guy. So you have to think to yourself now, if this is the reward you're going to get, what are you investing in? What are you investing in? Bitcoin is not going to be as risky as it was before, ever again. That's why its returns are going to keep diminishing over time. You know, we can now, after understanding this, right? Remember, as each cycle went on, the risk is getting yellow and more like we're losing the red tints. The risk is getting smaller. There's going to be even small again in the future, and you're going to get piss all reward, right? So not only do you see all the major influencers on YouTube, most of them say, you got to have Bitcoin. Bitcoin's the blue chip, the safe. Yeah, it is, but safe for what? Yeah, Bitcoin is safe if you bought back here. You know, if you bought here, you bought $1,000. Yeah, it's safe. It's not safe if you bought here, man. The crypto industry is growing. If you're in a stale coin, it's not safe for you. You know, not safe at all. You're missing out. Edge decays over time, which every cycle comes, the returns are getting smaller and smaller all across the crypto space. That's just how it is. So remember, these guys in the quant universities, they might say, oh, well, you know, Bitcoin's less volatile, so it's less risky. But what am I saying? I'm saying this is the amount of money to be made in crypto. It went up to heaps, and now it's decaying over time. That's what's happening. The amount of money to be made is a decaying function over time. It's decaying. So if you are squandering your opportunity and just sitting in Bitcoin, this is your potential future rewards. They're literally drifting down over time as it gets harder and harder. You know? This happens with everything, by the way, with everything. Just because there's more people come in, there's thousands more humans who are really, really smart, and then they decay the edge because people figure out what to do and they shortcut stuff. So, what can you do from knowing this? So you go, okay, my friend, I've understood now. Bitcoin's actually more risky to hold it now, knowing what we now know. When you have an understanding of the game and you know what you're doing, it's more risky. But what can we do? This is what you start doing. You start thinking, when I buy a coin, what is my risk? That's what you start thinking. What is my risk? Not that the coin never moves, but you got to start thinking, right? What is my risk? And more items equals better. Because that's what we want to look for. We want more items on the risk list. Not because it's great per se, but because if you can understand the risk better than the average person, you're going to kill it. You are going to kill it because there's an information asymmetry. There's information that you have because you put in the work, and there's information that other people don't know about because the prices are down. And if you look at my Twitter, you can see it. Go check. It is so... I don't even bother convincing people, but you can check yourself, man. It is so hard to convince people an asset is cheap. It's just not even worth your time. They'll believe you after the price is up already. That's just human nature. All right? So there are coins out there. Okay? We'll go through them later, but there are coins out there. If you are saying, this is what you want to save. All right? You want to look. Do they use the word Ponzi? Do they use the word scam? Do they use the word centralized? Do they use the word too early? Right? That's what you want to have a look at.